Hello and welcome to ABC News. I'm Dan Borscher. Housing prices nationwide have slumped in 2018 according to new data from Corelogic. Finance reporter Sue Lannon explains.
We've seen for 2018 a fall of about nearly 5% nationally, and that is actually the biggest since the global financial crisis. Of course, prices rose to record highs and construction's peak, so it's no surprise the prices are coming back now. Now, this data from Corelogic showed that prices fell by 4.8% over 2018. The declines were led by a 9% fall in Sydney and a 7% fall in Melbourne. Values dropped in half the nation's capital city. The other half saw prices rise, but mainly at a slower pace. Hobart prices jumped by 8.7%. Now, Cameron Cusher from Corelogic expects the downturn in the housing market to be worse than during the global financial crisis.
We're seeing the weakness continue in the housing market at a national level, and it's very much being driven by Sydney and Melbourne. In fact, the last quarter in Sydney was the weakest quarter for growth, well, the largest falls over a quarter we've seen since 1985, and the decline over the quarter in Melbourne, which was 3.1%, was actually the largest fall over a quarter we've seen on record, and our records go back to 1980. So, if anything, in those two largest capital cities, we're seeing the housing market conditions actually weaken further over the last 3 months of the year.
And what happened in regional areas?
Well, in the regional markets, we're seeing some weakness in those areas as well, but they're holding up much better than what we're seeing across the capital cities. Over the last year, we saw a 0.2% fall in regional market dwelling values compared to a 6.1% fall across the combined capital cities. So there's still weakness in those regional areas, but it's certainly not to the magnitude that we're seeing in the capital cities. And it's very much being driven by those areas surrounding Sydney, whereas regional markets in Tasmania, regional markets in Victoria, for example, are very much outperforming the capital city market performance.
And Cameron Cusher, what is driving the lower prices?
There's a number of factors. Obviously, in Sydney and Melbourne, you've seen a big run-up in prices over recent years, but everyone I'm talking to and all the data really does point to the fact that just the availability of credit and how it's so much tighter now than it has been for many, many years is a big driving factor of the weaker conditions. We obviously saw late last year that the Reserve Bank even felt it necessary to go and talk to the big four banks about making credit more freely available. So clearly, it is an area of concern for the Reserve Bank that it's just very difficult to get a loan at the moment, and that's impacting on property prices.
And just quickly, Cameron Cusher, will this downturn be worse than the one we saw in the property market during the global financial crisis?
Well, in Sydney, it's already worse. In Melbourne, it's pretty close to being as worse. So I think overall, when the dust settles, that this is going to be a deeper downturn than we did see during the financial crisis.
Well, joining me now to discuss the outlook for the Australian economy is Head of Global Markets Research at the Commonwealth Bank, Stephen Halmerich. Thanks for joining us.
My pleasure.
What's your view on the Australian housing market? Are you expecting further falls?
Well, we are, and as you just seen through that data, we had some falls at the very end of last year, and we would expect some further falls through 2019, perhaps around 10 to 15% for both Sydney and Melbourne, so it's a little bit more to go. But I think we need to put those declines in the context. We're talking about, in that piece there, the biggest fall since the GFC. Well, in that 10-year period, Sydney and Melbourne house prices were up, quite massively, 70, 75, 80%. So some declines from those huge gains is not surprising given the increase in supply and some reduction in demand that we've seen over the course of last year. So I think, in percentage points terms, we're talking about, big declines, but in the context.
We're taking you live in Brisbane.